It feels like the global real estate market isn't just cyclical anymore.
Right.
It's really undergoing a seismic kind of transformation,
It really is. We're seeing this massive volatility.
driven by everything from, you know, pandemic migration shifts to these completely unpredictable inflation swings. So if you're an institutional investor or developer, your decisions are these huge multi-million, sometimes billion-dollar bets. The big challenge right now seems to be, how do you ground those massive financial decisions in certainty instead of just hopeful guesswork?
Well, that's the core of it. The problem is that the traditional toolkit, it just can't keep pace.
You mean like the local brokers' insights, that sort of thing?
Yeah, that or your own internal experience or even market research that took 6 months to compile. It's already out of date.
Because the market is moving too fast.
Way too fast. Forces like interest rate changes, labor dynamics. We're seeing a complete failure of intuition when it has to face this kind of speed.
And that, I think, brings us to the mission for this deep dive. We're going to explore how AI-powered strategic intelligence is stepping in. And it's not just some fancy dashboard, is it? It's more like a necessary bridge over a very expensive information gap.
That's a great way to put it. And the financial stakes are just enormous. Real estate leaders are operating with what we call the intelligence gap.
Okay, so what is that exactly?
Well, the first core issue is just fragmented data. All the information you need, pricing signals, demographic forecasts, it's scattered across dozens of different places.
Brokers, agencies, financial reports.
Absolutely, it's never unified.
So with the data being that fragmented, is the real risk here financial or is it more operational? Because in real estate, the margin for error is razor thin.
It's both. Absolutely both.
A miscalculation on timing or pricing, especially in major city, could cost a firm tens or even hundreds of millions.
And that's what we see. Fragmented data leads directly to inconsistent forecasting. I mean, think back to 2008. The traditional models completely missed the early warning signs because they weren't looking at variables like, say, population mobility or stress in the labor market.
I see. Which is why this strategic intelligence is emerging as really the only viable operating model now.
It is.
So let's zoom in on that solution.
Oh, wow.
We're clearly moving way beyond just looking at square footage and historical rent. What specific data streams are powering this?
What's fascinating here is the data blending involved. It's about using these advanced prediction models that pull from over 21 years of global real estate and economic data.
21 years, that's a huge data set.
It is, but crucially, it doesn't just look internally. It integrates these incredibly powerful external indicators that truly drive the market.
Okay, like what?
We're talking about comprehensive inputs like GDP cycles, CPI,
The Consumer Price Index.
Consumer Price Index, yeah, along with detailed mobility data, income trends, and really deep labor market shifts.
It sounds like the difference between looking at a handful of puzzle pieces versus seeing the fully assembled 3D map.
That's it. And this intelligence funnels all of that complexity into answering the real questions.
The ones that dictate investment discipline.
Right. When is the optimal moment to launch or acquire an asset? Where are the next high-opportunity submarkets hiding? How should you phase your projects to maximize ROI?
And the results this produces, pretty incredible from what I've seen. We're talking about a huge leap in accuracy.
The numbers are transformative. Firms implementing this are confirming 90% or higher accuracy in forecasting pricing and demand.
Wait, 90%? That sounds almost too good to be true, especially now. Where does that other 10% of uncertainty come from?
Well, the uncertainty is always going to be the human element, right? Or unforeseen political shocks. But the technology drastically reduces the systematic risk.
So this isn't theoretical.
Not at all. It translates into real quantitative gains. We're seeing a documented 20% reduction in investment and timing risk.
And that leads to, what, in terms of return?
An 8 to 12% higher ROI per asset or project. And decisions are being made 30 to 40% faster.
So what does all this mean for you, the listener? Ultimately, AI delivers a level of speed and precision that, frankly, human analysis just can't match.
It's processing millions of data points instantly.
Identifying these subtle market relationships that are just invisible to conventional methods, it's pretty clear that building smarter and investing sharper requires this level of foresight.
The future of global real estate is going to be defined by intelligence, not intuition. And that benefits everyone from private equity to large institutional investors.
So the message is clear. AI brings certainty at scale. It's becoming a strategic necessity, not just some experimental tool.
Which leaves one last thought.
Hmm.
If this AI can predict market movements 12 to 24 months out with over 90% accuracy,
Yeah.
what does that imply about the competitive advantage or maybe the critical risk for the firms who delay adopting this technology? That's the question every real estate executive needs to be answering right now.